So let's continue. So financial accounting. So let us continue. So I was saying today we are going to do financial accounting. And to be specific, we are going to do preparation of the final account of the partnership, preparation of the final account of partnership. So that's our focus today. And we shall start from the definition of a partner. So what's a partnership? What's a partners or partnership? And then we shall look how to prepare the financial statements of the partnership account. So we have various items that we need to know when it comes to preparation of the final account of partnership. So let me open one of the past paper, another past paper notes. Okay. So tell others to join. Tell others to join. Time is not on our side, so get the others to join.
Natichi. Tarehe 14, si ndio?
Hiyo tarehe 14 ya mute. Hiyo tarehe 14 ya mute tafadhali. So I think welcome now to our class. So preparation of the final account of partnership. So preparation of the final account of partnership. That's our topic. We say preparation of a final account of partnership. The preparation of the final account of partnership. Remember, this one is FA plus. So those who are joining now, it is financial accounting class. Financial accounting class. So we shall start by defining what's a partners and what it is, a partnership. So we shall start from that point of view. And then tukimaliza meaning of partnership, we shall look for some of the important accounts that we need to prepare. Some of the important accounts that we need to prepare. And then later we prepare the final accounts. Then we shall also talk about the aspect of admission of a partner we have the retirement of a partner, and then dissolution of a partner. So we shall look at it. So the dissolution of partner is it is not easy task, but we need to do it. Now let us start with partnership. So let us define a partnership. Partnership. We shall start with the definition of partnership. Partnership, and we shall say that partnership it includes at least two individuals. So when I say at least in the mindset two or more, so at least two individuals to carry out a business, with the motive of making profit, with the motive of making profit, with the motive of making profit, with the motive of making profit. So that's what we mean when we talk about a business, a partnership. So a partnership is a situation where two people carry out business for the purpose of making a profit. So two people carry out a business for the purpose of making profit. So there must be a profit motive, and at the same time there must be what we call two people engaging in, so at least two. So when you said at least two, it must be more than two person. We can talk about partnership agreement. Partnership agreement. So hapa tunaguzia siandiki vitu mingi because this one you did it in relation to business. The theory part of it you did it. So sitaguzia sana what is partnership, blah blah blah, type of partnership, nini. So content, let us see content of partnership. It has the following content. It has the following content. Let us name some of the content you might find in a partnership agreement. We can say the name of the firm, the name of the firm of the partnership, the name of the firm of partnership, and location. That's number one. Number two, nature of the business, the nature of the business to be carried out by the firm. To be carried out number C, it also has the amount of capital contribution by each partner, amount of capital contribution by each partner, amount of capital contribution by each partner, the ratio of profit to be shared. Must also have the ratio of profit or loss to be shared among partners, to be shared among partners. So that one is also another content that you might find in the partnership agreement. And then the rate of interest the rate of interest allowed. The rate of interest allowed on the investment of capital. On investment of capital. So that's another content you might find in the partnership. That's another content which you might find in partnership. Yeah, we can move on. Salaries to be allowed to partners. Salaries will be allowed to partners. Number G. So salaries to be allowed to partners. Method of admission of a new partner. Method of admission of new partner. Then after the method of admission of a new partner, and then the manners to which account must be prepared. Manners to which accounts must be prepared. So those are some of the items that you might find when we are talking about a partnership account. So those are some of the items that you might find when we are talking about the partnership account. So those are some of the partners agreement that you might find in a partnership agreement. In partnership agreement. Okay, we can move on. Let us see right of the partners. Some of the rights of a partner. So rights of a partner. So rights of partners. So we shall name just few of them. For example, every partner is bound to diligently carry on the business of the firm. Carry on the business of the firm. The business of the firm against the common advantage. The greatest common advantage. Greatest common advantage. Number B. Every partner must be just and every partner must be just and faithful to other partner. Number C. Sorry. Hizi nawapatia ni wrong ones. These are the duties, not the rights. Hii nilikuwa naambia ni duties. Let us start with the rights first. Those are the duties. Let us start with the rights first. Yes. So you can say every partner every partner has the right to take part in the conduct of the business. So every partner has the right to take part in the conduct this one nini shida yake? Nasema every partner has the right to take part in the conduct of the business. In the conduct of the business. Number two, we can say every partner has the right to be consulted. Every partner has the right to be consulted and heard in all manners of the business. Another one, every partner has the right to free access. Every partner has the right to free access. Of partnership record. So every partner has the right to free access of the partnership records. And then so every partner has the right to retire according to the deed. Every partner has the right to retire according to the partnership deed. So every partner has the right to retire. According to the partnership deed. And then you can say every partner has the right to continue in the partnership. Every partner has the right to continue the partnership. So every partner has the right to continue in the partnership. Those are some of the rights. We don't need to give a lot of them, but those are some of the rights of partners in a partnership. So those are some of the rights of partners into the partnership account. So we can see now, we can look at the powers or the duties. We can start with the duties. We can look at the duties of the partnership. So in a pen, because this one are the item that you also did. So what are the duties of partnership? Duties of partnership. And remember, we need to do one question for partnership, because I think this class will take us at least 4 classes. So today we need to do at least one question. Now, let us see duties of partners. Duties partners. Number one, no partner can assign, no partner can assign, so no partner can assign or transfer his partnership or transfer his partnership. His partnership interest to another person. Number B, we're talking about the duties. A partner is bound to act. So a partner is bound to act within the scope of his authority. Within scope of his authority. Number C, every partner is bound to share profit or loss equally. That's another one. So each partner is bound to share the profit and loss equally. Another one. Every partner is bound to diligently carry out the business. Every partner is bound to diligently carry on business. The greatest common advantage of the firm. The greatest common advantage of the partnership. Because for exam. Every partner must be just and faithful. That's another duty. Every partner must be just and faithful. So every partner must be just and faithful. This is a metosha. So we can go to powers of partnership, powers of partners. And run the metosha. Powers of partners. Number one, each partner has power on buying and selling of goods. On buying and selling of goods on behalf of partnership. Number B, receiving payments. So every partner has power to receive payments. So every partner has the power to receive payments on behalf of the partnership. On behalf of partnership has the power to receive the payments on the behalf of partnership. And then borrow money. So every partner has the power to borrow money on behalf of partnership. On behalf of partnership. So every partner has the power to borrow money on the behalf of partnership. And then every partner has the power to engage the servants. So has the power to engage the servants of the partnership. The servants of partnership. Of the partnership. How that is all about it. So some items we shall explain them. So accounts need that you must prepare. So accounts to be prepared. To be prepared. And a partnership. And a partnership. Number one, in the income statement. The income statement or profit and loss account. I look at the profit or loss account or the trading profit and loss. Then the appropriation account. This one must be opened. Appropriation account. Then number three, talk about the balance sheet. The balance sheet or the statement of financial position. Other people call them statement of financial position. Statement of the financial position. Statement of the financial position. So we shall concentrate with this part, the appropriation account. So we shall concentrate with the appropriation account because this one is a new thing. The rest are the same. So for sole trader, now for sole trader, you're supposed to prepare the income statement and the statement of the financial position. That is for sole trader. But when it comes to partnership, we need to prepare the appropriation account. Now, the appropriation account, let us see how it looks like. And then also, number four, we need to prepare the current account. The current account. And number five, the capital account. So capital account. So these are the two other extra that we shall need to take a look. So the three of them, we need to, so the appropriation account, the current account, and the appropriation account are the account which must be prepared when it comes to the preparation of the final account of the partnership. So our focus will be the appropriation account, the capital account, and the current account. For the income statement and the balance sheet, it is the same as the one for. It is the same as the one for. It is the same as the one for what? It is the same as the one for preparation of final account of a sole trader. Now let us talk about the fixed account. We can start with the fixed account and the current account. Now, account. So in the case where the company wants to retain the balances of the capital account, in most cases, the adjustment will be made to the current account. But if the company do not want to retain the capital account balances, then there will be no need to prepare the current account. But in most cases, in our question, we shall assume that the capital account is fixed, and therefore the balance, its balance is not affected with a lot of items. But that one is okay. But that one is okay. But what I would say is that the capital account is mostly fixed. So the capital account balances is mostly fixed, while the current account total of is the total of the appropriation and the shares of profit residue and the drawings. Okay, let me write it down. Let me show you. Let me show you. So if you understand the appropriation account and the capital account, the current account, then I think you can do the normal question for partnership. No, we have different aspects. So we have the normal account. So we say now for capital account is made up of two items. Capital account, we have the fixed. It is made up of two items. We have the fixed account and we have the fluctuating account. Fluctuating account. It is made up of two items. So the capital account is made up of two items, the fixed account and fluctuation account. Now, when we talk about the fixed account, we mean fixed account means no changes in the balance of the capital account. No changes in the balances. The balances of fixed account. Of the capital account, sorry, of the capital account. So when we're talking about the capital account, we have two items, the fixed account and the fluctuating account. The fixed account, it means that the balances of the capital account is not changing. But when we talk about the fluctuating account, now the current account must be maintained. So in fluctuating account, the current account must be maintained. Must be sorry sorry. So in this case, which case, when we have the fixed account, so in the case where we have the fixed account, remember there is no change in the balances of the capital account. The capital account is remaining constant. The balances are not changing. And therefore, in this case, when we're maintaining a fixed account, then we must prepare the current account. The current account must be prepared. The current account must be prepared. Now, so any changes which affect the fixed account will be transferred to current account so that the balances of fixed account remain the same, so that those items which affect the fixed account will be transferred to the current account so that the fixed account will remain constant. And then for fluctuating accounts, fluctuating account, capital account must be adjusted. Capital account must be adjusted. Capital account must be adjusted. And therefore, in this case, capital account is not constant. In this case, capital account is not constant or fixed. The capital account is not fixed. So in that case, we talk about fluctuating, then the capital account is changing. So the balances for capital account is changing. And therefore, there must be some of the adjustments that must be made. There must be some adjustments that they must be made. So formats, let us see format of the current account. Let us have the current account. Current account format. I will put it here. So let us assume we have two partners, partner A and partner B. So we are going to assume we have only two partners. Partner B and A. Hivyo. So this one, the balances is always on the credit side. This one is the credit balance. But in case we want a balance, this is a credit balance. So credit. If it's a debit balance, it will go on the other side. So this one is credit balance. But you can also find a balance on the other side. Balance brought down, which is a debit balance. You can also find it on this side, depending on the question. So you can also find the balance brought down either at the debit side or the credit side. So can be debit side because I did. Can be credit side on the other side. Then interest on capital. Interest on capital. Interest on capital. It is on the credit side. Interest on capital. Salaries. And remember, this is to partners. Ukumbuka ni salaries for partners. Not any other salary. Salary for partners. Yes. Share of profits. Share of profits. Yes. Nani wanasemaje? Amunisikii? Yes. Amunisikii?
Nakusikia.
Sawa. So share of profit unaweka hapo, and then pia unaangalia kama uko na kama walikuwa wamepeana any partner walikuwa wamepeana loan. So loan. So kama partner alipeana loan. So sometimes unapata a partner repair the partnership a loan. So loan interest. So the loan interest. So the loan interest. Loan interest. So kama alikuwa amepeana loan, the loan interest that side. Alafu interest on drawing. Interest on drawings. Itakuwa hii side. Alafu drawings itself pia. Kama kulikuwa na any drawings, itakuwa on the other side. And then tunamalizia na balance brought down. So balance carry down. So balance carry down on the other side. Then una balance. So remember the balance carry down can also be on the other side. So but to be on the safer side, itakuwa side hii sisi tutaitumia ikiwa the credit balance. Hivyo iko sawa. So that's a format of the current account. So current account, remember we start with the balance brought down on the credit side. So mostly inakwanga the credit side. But ukipata debit side you do iko side hii. So balance brought down, we have it there. Interest on capital on the other side. Salaries and specifically salaries to partners on the other side. Then kulikuwa na loan, kama alikuwa amepeana loan. So kama partners walikuwa wamepeana loan. So your loan on interest. So the partnership is paying that person an interest. So partner alikuwa amepeana loan kwa kampuni. And then to the partnership, not kwa kampuni. So partner alikuwa amepeana loan kwa partnership. And then the partnership is paying him or her the interest on that loan. That interest on that loan will be on the credit side of the current account. Then on the debit side, we shall have the interest on drawing, and then the drawing amount. The drawing amount. Now, the reason why we are debiting this amount. So, for example, the reason why we are debiting the interest on capital ni kumaanisha partner is receiving that amount. It means that the partner is receiving that amount. Kwa hivyo kwake ni income. Salaries also is an income to a partner, so that tunaweka the other side. Share of profit is also an income. So wakipata profit, wanakuja wanaweka hapo. The profit inakuja na share to them. Now, when we debit the current account with our balance on the debit side, kumaanisha we are increasing our balances. So kumaanisha tutakuwa na pesa mingi. Haya, interest on drawings and drawings tulikuwa tumechukua goods. So for example, tumechukua goods for personal use. So drawings tumechukua goods kwa kampuni, hatujalipia. And therefore tutakatwa. So tukiweka side tunamaanisha drawings na interest on that drawing kwa sababu tumechukua goods on drawing na pia tunalipia the interest. So partners wanalipia. So it must reduce our balance. It must reduce this balance, these two balances. So any item on the debit side of the current account is reducing the partner's balance. But any amount on the credit side of the current account, it means it increase the balance of the partner. So any interest on capital kumaanisha partner amepeana capital kwa partnership. So that one will be increasing the balances of this person from time to time. And then the balance is what the partners is worth of. So if they were to dissolve the partnership, this is the amount that they should be paid. So for example, kama hii partners wanataka kuimaliza leo, the amount yenye wanafaa kulipwa ni hii, this balance. Na ndio hiyo ukiadd hizi zote hapa chini, hii total is the total amount this person amecontribute to the partnership. Then tutoe yenye walitoa. So what is remaining is what they shall be paid if they were to dissolve the company, the partnership today. Now, share of profit. How do you get this share of profit? Let me show you how to get the share of profit. So for you to get the share of profit, you must prepare what we call the appropriation account. So appropriation account. So let us prepare an appropriation account. Appropriation account. So appropriation account. Appropriation account. Now you start with our adjusted net profit. So we usually start with the adjusted net profit. Then we add interest on drawing. We add interest on drawings. Now what we less interest on less. So anything that is on the credit side of the current account, we are adding it back in the appropriation account. Remember that one? We are supposed to add it back. So anything on the credit side, because we are lessing, then we are supposed to add it back in our appropriation account. And then we less interest on capital. Interest on capital. Now remember, in the interest on capital, it was added back in our balances, in our current account. So it was added back. So on this side, Namasha, we were adding. On this side, we are lessing. So if you were adding it, you were supposed to less it on this side. And remember, it must be it's for the partners. For example, let's assume, let us do this to see complicated maneno. Let us say we have two partner A and B. So the interest on drawing the here apple, then the total amount, we add it back. Then less interest on capital. So we have partner A and B. We are supposed to less the total amount. And then we less salaries. Salaries. Let's assume it's only partner A and they require a salary. So we might find in some situation, only one partner has the salary. Then share of profit also the balance. Now the balance is called the residue. The residue profit. Residue profit. Now this one is to be shared among the partners on the basis of. So Musha is this account. Let me do away with it. Now the residue is to be shared among the partners according to their profit and loss. According to their ratio. So profit and loss. My share of profit and loss. Share of profit and the loss. So to each partner, so we have partner A and B. So let's assume they are sharing some amount here. So that the final figure, that one is 0. So the balance, now to share all the amount so that the balance is 0. So that amount will be shared among the partner. And then remember this profit and loss, itakuja on the, so remember this amount itakuja on the other side. It will be on that side. Remember we are lessing this amount. So from the residue, so that the amount is 0. So we are raising, so it's supposed to be on the debit side of the current account. That one is okay. Let us see the capital account. Then to Marizie, the capital account. Let us see the capital account. Capital account. Capital account. So kama kawaida, we have two partner A and B. That's our assumption. A and B. So we start with the balance. Also, this one balance will down on the debit on the credit side. But you can also find in a situation where the balance is on the debit side. But to be specific, let us assume the balance is on the credit side, the normal one. What do we expect? So the balance is also always on the credit side. And then this one, we shall share the revaluation. So revaluation gain. So revaluation gain. So on this side. So if we have a gain, and then in case we have a loss, revaluation loss, in case there was a loss in revaluation of an asset, itakuwa huko. Then any additional capital. Now, this one occurs where we have a new partner. So, for example, this one is a new partner. Let us see partner C. Any additional capital. Any partner mwenye anaingia kwa biashara huwa ana contribute capital. So that capital is called the additional capital. It is added to the partner who is coming in. Tutaangalia na swali baadaye. Then goodwill on this side. And then goodwill written off on this side. Goodwill written off on this side. Then balance carried down. Napata hivyo. So I want us to do a question. But before we do a question, there's something I want to tell you also. So that's a normal account. When we are talking about the capital account, and I think that one is okay. When we talk about the capital account, so hapo sina mambo sana. Yenye haina mambo mingi. Or you can do the one for a sitting. Here ilikuwa retirement. Now we need to know some items here. There's something that we need to know before we continue. So we can go to November 2016. November 2016, question number 2A. Now, before we do that question, let me tell you something. So before we do that question, November 2016, so before we do that question, let me show you something. So the following item must be, you must be familiarized with the following item. So you must be familiarized. With the following. With the following when it comes to preparation of the final account. When it comes to preparation of final account of partnership. So these are the items that you need to know. Number one, normal preparation. Normal preparation, i.e., no changes in partnership. When we have no changes in partnership. And a good question here, sorry, November 2016. November 2016 is a good question to do when we do not have any changes in partnership. There is no admission. So, for example, other subsides you need to know how to prepare account when it comes to admission of partnership. Number two, changes in profit and loss ratio. Changes in profit and loss ratio. Number four, death or retirement of a partner. Of partnership. Then number five, dissolution of partnership. So we need to know to do all these items. Dissolution of partnership. And the easiest part of this question, this one is the easiest. Because we are in mambo mingi. So we need to do this one today so that tomorrow we can do admission and changes. Admission and changes. And then the other is going to death and dissolution. Now let's start with the normal. So the normal preparation. And tumesema we shall do the question of May 26, not November, May 2016. May 2016, question number 2A. The question is about Maria and Bakari. The question is about Maria and Bakari. The question is about Maria and Bakari. Nani anatusomea? Rorin tusomea leo. Rorin, Maria and Bakari, May 2016. Yes.
Maria and Bakari are in partnership sharing profits and loss in the ratio of 3:5 for Maria and 2:5 for Bakari. The partnership did provide for interest on capital at the rate of 5% per annum. The partners are entitled to annual salary of 1 million and 700,000 for Maria and Bakari respectively. The following balances were extracted from the books of partnership as of 30th April 2016. Capital for Maria and Bakari, 12,000 and 5,000. Current account Maria Bakari, 3,000, 1,000. Inventory as at 1st May 2015, 19,000. Building at cost, 8,500. Furnitures at cost, 3,200. Renovation of building, 1,500. Sales, 87,460. Purchases, 62,140. Rent and rates, 400. Electricity, 500. Bank balance, 1,070. Account payable, 6,200. Account receivable, 5,660. Repairs and maintenance, 1,320. General expenses, 4,700. Insurance, 300. Carriage inwards, 960. Bad debts written off, 270. Salary and wages, 2,400. Office expenses, 600. Provision for depreciation. Furniture as at 1st May 2015, 750. Cash balance, 230. Drawings Maria and Bakari, 800 and 2,000. Total of 116,480 additional information. Inventory as at 30th April 2016 was valued at 15,600,000. Depreciation is to be provided as follows: building 2.5 per annum on cost, furnitures 10% per annum on reducing balance. The following amounts were owing as at 30th April 2016: salaries and wages 200,000 shillings, electricity 90,000. An allowance for doubtful debt amounting to 200,000 is to be made. Insurance paid in advance as at 30th April 2016 amounted to 40,000 shillings. During the year ended 30th April 2016, the partners withdrew goods from stock for persons as follows: Maria 150,000, Bakari 590,000. You are required to prove income statement for the year ended 30th April 2016, statement of financial position as of 30th April 2016.
Thank you. So tunasema Maria and Bakari. Partnership income statement. Partnership income statement. Income statement for the year ended. For the year ended. The year ended. That is April. Then it's 16. So our figures is in thousand. So the sales, so utakuwa nikifanya adjustment, nitafanya tu adjustment kwa swali yangu ndani. So unaweza mute. So our sales, if you go to our trial balance pale juu, our sales is 87 for 60. Can you see it? 87 for 60. Then you're supposed to less any return inwards. Do you have any return inwards from the question? Return inwards. We have a carriage inwards. Carriage inwards is not a return inwards. Hiyo tunaachana nayo. That one relates to purchases. That one relates to purchases. So tuachana na hiyo. So carriage inwards tunaachana nayo. Itakuwa kwa purchases. So we less cost of sales. So you're supposed to start with opening stock. Opening stock. So opening stock was already pale juu. If you check it clearly, our opening stock iko pale juu 19,000. Iko pale juu 19,000. We are supposed to add purchases. Now purchases is affected by an item. So kuna item which is affecting the purchases. But rather side first the purchases 62,140. Now, what items affect the purchases? Now, if there is any drawings from stock, so let us read information number 6. During the year ended 30th April 2016, a partner withdrew goods from the stock. Now, the keyword there is the word from stock. Kama angesema the word stock, haingekuja hapo. But because we have talked about the word stock, then we shall have drawings. So we less drawings. So it reduces the stock. And stock tunaweka kwa purchases. So walitoa gani na gani 150 Kenya shillings na pia wakatoa 590, both the partners. So 150 plus 590, 150. Is my board clear? Yes. Is it clear? Is the board clear? Yes. Can you see the board? Is it clear?
Yeah, it's clear.
Okay, then we add now the carriage inward. So add carriage inward. Nilikuwa nimeona carriage inward somewhere. The carriage inward itakuja ngapi? 960. So can you see the 960? Then now we can less closing stock. Now our closing stock was what? Yet if you go back to our question, if you go to our question, our information number 1, closing stock is 15,600. So remember it's in 15,600. So get the amount so that we can get our gross profit. So how much is that? So here in Gabi, what will be the cost of sales? So 19,000 plus 62,140 minus 740 plus 960 minus 15,600. 65,760. Are you getting 65,760? Then tutachukua 87 our sales for 60 minus 65. So are you getting that one? Now, do you have any income before we go to the expenses? Let us see if we have any income. Now, we do not have any income. Let us see for allowance. Did you have allowance for bad debts? So that you can see if we have an increase or a decrease. Allowance, yes, allowance for doubtful debt. Information number 4 was 200,000. Now, do you have any other allowance for bad debts in our additional information in our trial balance? Trial balance, no. There was no any. So kumaanisha there was no any income. So let's start with the depreciation. So depreciation, the first depreciation I can see, information number 2. Let's start with the information number 2, building. Building. Now the building will be 20% on cost, 2.5%. So 2.5% on cost. So we go pale kitu angalia our building because I'm talking on cost. So the building is already on cost 8,500. So already it's on cost 8,500. 1,500. So itakuwa ni 2.5 times 8,500 to 12.5. Unapata hivyo? 12.5. The next one, depreciation for furniture. Now for furniture, it is 10% on reducing balance. 10% on reducing balance. So on reducing balance, remember, we need to less the provisional or the accumulated. Now the furniture is already on cost. So it is 3,200. But because it's on reducing balance, we need to less any provisional for furniture or the accumulated depreciation for furniture. Do you have the provision for furniture? Yes. Pale chini, the provision for depreciation furniture, 1st May 2015 was 750. 750. So how much is that? So that's 200 minus 750 times 0.1. 245. 245. So you ametuambia ni first May kumaanisha ilikuwa there for the whole year. So we don't need to adjust. So it was there throughout the year. Let's go to the information number 2, number 3. We have an owings. So we have salary and wages. So we have owings. And the first one is salary and wages. Now, let's go pale juu kwa swali yetu, angalia salary and wages ni ngapi huko juu. In our trial balance, our salary and wages is 2,400. Now, what did you say about always? Are we supposed to add the always back, or are we supposed to less? Always, remember always kumaanisha tujalipa the full amount.
We add.
Yes, you're supposed to add 200. Remember that one itakuwa a liability kule nyuma, sivyo? Remember we have a liability there. Itakuwa ni 2600. Remember we have a liability there. Aya, tusoge. We have another owing of electricity. So we have another owing of electricity. Now, electricity in our in our trial balance, our electricity in our trial balance ni ngapi? 500. 500. And then you have an owing of 90. Remember, itakuwa pia liability. So itakuwa ni ngapi? The total expense is 590. So tumemalizana information number 1, 2, and 3. So tuko na information number 4. Allowance for doubtful debt. Hiyo tutaweka. Hiyo we need to put it the way it is. Ni 200. But kama kumekuwa na any item, allowance for bad debts. But remember, kama kumekuwa na any allowance for bad debt in our trial balance, tungeangalia if it's an increase or a decrease. An increase is an expense, a decrease is an income, but because hakuna, so that one is the first allowance wameweka. It was not there in the previous year, so itabaki 200. Mazana nayo. Another information is number 5. Insurance is a prepaid. So insurance is a prepaid. Now, how much is our insurance in a trial balance? So tukienda kwa trial balance yetu insurance wanatuambia ni 300. Now we are supposed to less the prepayment of 40. Remember it is 40, figure is in 1,000. So remember start, because remember this one will be an asset in our, so the 40 will be an asset. So we need to do a 2 adjustment for now. According to 60. That's for insurance. During the year, drawings, though you can ignore, drawings to be there in the capital account. So tunaruka drawings. Tumemalizana na additional information. So let's go to our income statement now, tuangalie any other item which is an expense tuweke hapo. So tuanzie huko juu, capital account iko sawa, current account iko sawa, inventory iko sawa, building sawa sawa, furniture sawa sawa. You have renovation of building. Renovation of building, what do you think? That is an expense. Renovation of building. That one is an expense. Renovation of building is an expense. 1,500. So I incur an expense of renovating a building of 1,500. That one is okay. Sales, ignore. Purchases, ignore. Rate and rates, yes. Rent and rates 400. Rate and rent is also an expense. 400. Electricity tumeshafanya. Bank balance ignore. Account payable ignore. Receivable repair and maintenance 1320. Repair and maintenance 1320. Repair and maintenance 1320. So repair and maintenance 1320. General expense for 700. General expense for 700. General expense 4700. General expense for 700. General expense. Insurance tumefanya carriage in what's bad debt written off to 70. Bad debt written off to 70. That's also an expense. Bad debt written off as an expense. Salary wages tumefanya. We have office expense 600. Office expense 600. Office expense 600. Office expense 600. And then provision for depreciation, that one is okay. Cash balance drawings, that one is okay. Hiyo itaenda kwa drawings account. Now hiyo tumemaliza. Now give me the profit, net profit or loss. Net profit or loss. Give me the net profit or loss. So in this case, we shall be having a net profit or a net loss. So net profit or loss. Imeharibika hiyo, need to dispose it. Nimekula baka profit na bado nailazimisha. So net profit or loss. So give me the figure na muifanye mzuri, make sure umefanya vizuri, ume minus vizuri. Then you give me the figure. You give me the figure. So inakuwa ni ngapi? 21,700 minus 212.5, 212.5, 245, 2,600, 590, 200, 260, 1,500, 400, 1,320, 700, 270, 600. Unapata ngapi? 8802.5. 8802.5. Confirm?
Yes.
Confirm.
Yes.
That is okay. Now we can prepare appropriation account. So let us prepare appropriation account. You can share hapo chini. Now you said appropriation account. What are we supposed to do? We are supposed to add back. So we are supposed to add back interest on drawings. Add interest on drawings. So this is appropriation account. So kutoka hapa nafanya appropriation account. So in this case, we don't have any interest on drawing from the question. So no question of repair interest or repair to drawings. There was no any interest. But repair to the drawings for the year were this and this and this, but they did not give the interest on drawings. What about the percentage of the drawings? We were not given also the percentage of drawings, but interest on capital we have. So less interest on capital. So partners walikuwa ngapi? They were Maria and Bakari. So Maria and Bakari. Maria and Bakari. So interest on drawings iko pale juu. Interest on capital iko pale juu. Tukianza pale kwa question 2 pale juu. Maria and Bakari are partnership sharing a profit and loss of 3:5 and 2:5 respectively. The partnership did provide an interest on capital of 5%. Now it is 5%. So the interest on capital hiyo alikuwa ametupatia, lakini ya drawings hatujapewa, so kumaanisha drawings hakuna. So it is 5% per annum. Now 5% on the capital. What's our capital on drawing? And also capital account. We compare kwa our trial balance. So the capital account for Maria ni 12,000. Can you see 12,000? Can you see 12,000? Pale tukianza trial balance.
Yes.
Yes.
So on capital, so that is our capital 12,000. Huyu mwingine ngapi? Bakari
5,000.
5,000. Yes. So we less those amounts. So we're supposed to less those amounts. So 5%. So 5/100 times 12,000. Anakuja ngapi? 600. And then 5% of 5,000 into 50. So we add them together and then tuna minus 850. So 600 plus 250. So itakuwa ni hiyo. So we less the amount. So we get the residual profit. So this one, remember, is our appropriation account. Residual profit. Less itakuwa ni 8802.5 minus 850. Itakuwa ni 7952.5. 7952.5. Then you are supposed to less, sorry, kuna kitu tumesahau, salary. We have salaries for partners. Niko nimeona wapi salaries? salary. Unaona mali salary. Dile pale juu. The partners are entitled for annual salaries of 1,700,000 respectively. So before that, to less the residual profit, before we get this, we need to also to less. Before to get it, we need to less salaries to partners. To partners. So we have Maria and Bakari. So Maria salary yake ni 1 million. Don't get ni 700,000. So itakuwa ni 7. So tuna less 1,700. So that we can get the residual profit. So itakuja ngapi? So tunasema 8802.5. So salary ziko pale juu. So Maria salary yake ni 1 million, mwingine 700,000. So 8802.5. So uweke in thousand na 1,700. Napata 6252.5. So 6252.5. So tunaendelea hapa juu. Now share of profits. Share of profit. So we have Maria and Bakari. So share of profit iko pale juu. The sharing profit and loss ya Maria ni 3/5 na Bakari ni 2/5. Huko juu 3/5 na 2/5. So tuna share hii profit 6252.5. 6252.5. 6252.5. Inakuja ngapi? Inakuwa ni 3/5 times 6252.5. 3751.5 ya kwanza. Itakuwa ni 3751.5 na wa pili 2501. Then the total is 3751.5 plus hiyo 6252. 6252.5. So that the balance itakuwa 0. So ukichukua 6252.5 minus inakuwa the balance will be 0. So this is what is shared to Maria, and this one is what is shared to Bakari. Now we can prepare the capital account. Now in this case, you are not supposed to prepare the capital account. You are supposed to prepare the okay, we can prepare the capital account, but I prefer we go with. Do we go with capital or the current account? We prepare the current account because we prepare the current account. Capital account to remain fixed. So in this case, we are going to assume that the capital account will remain fixed. So the capital account will not change. So because hakuna kitu tumeambiwa na hii swali, we are going to prepare the current account so that our capital account is quite constant. It's changed. So current account. So the partners walikuwa wawili, Maria and Bakari. Kama hapo inaonekana haiko sawa. So we have Maria and Bakari. Haya. Maria. Then you have Bakari. Maria Bakari. I think iko sawa. Now we can start with the balance breakdown. Balance breakdown. Now if you go to our question pale juu kwa balance, tuanze na capital account pale juu. No, not capital, current account. Now current account, all the balances ziko pale juu. The balance ya current account ni 3,000 na 1,000. So ziko on the debit side, ziko on the credit side. 3,000 na 1,000. So those balances ziko on credit side. So ukienda pale we have the current account. So capital account na ignore. Tuna assume the capital account will not change. Inabaki hivyo. Then what are some of the items? Number one, salaries will affect this account, as we said. So 1,000, that's 700. Remember the 1,700, those are the salaries. So 1,000 and 700. And then another one, interest on capital. In hapa. So interest on in days hapa. Those items which affect the appropriation account. So interest on capital. Interest on capital ni ngapi? Now interest on capital and days iko hapa. 650 days hapa. Our account hapo 650. So days hapa. So if what we less, we're supposed to add them there. So what do we less? So to less interest on capital, 650 also. Now here to less what? To less salaries. The salaries 1,700. We also less share of profit. Share of profit. Itakuwa ni 37. Share of profit ni 37. They are 37, 51.5, na 25.01. So those are the share of profit. Do you have any other account which affects this account on the debit side? Yes. Drawings. Now without drawings. Drawings. Now one of the drawings ilikuwa cash. And the other one was good. Now for goods ndio hizi hapa. Iko wapi? For goods ndio imeenda wapi? Drawings. Kuna mahali tulikuwa tumeweka ndio hapa. 150 na 90. Hizo zilikuwa za goods. So za goods tuweke kwanza. So Maria alichukua 150. Ndio hizi hapa. Na kwa hizi itolesa hapa kwa purchases na nani akachukua? But tulikuwa na pia na drawings nyingine kwa additional information. Let's go to additional information. In additional information, you had another drawings. Pare tu. So that drawings, we shall assume to relate to cash. 2,800 and 1,500. There was no any other item. 2,800, not 1,500, is 2,000. Tunaiona pale chini kwa trial balance, pale chini kabisa mwisho chini ya trial balance. Before uende kwa additional information, before you go to additional information, kuna drawings hapo. So that drawings will also affect this account. So that drawings will also affect this account. 2,800 na 2,000. Now we can balance this account. We can try and balance this account. So which side ni kubwa? I think this side ndio iko na mingi. So that side I think iko na mingi. So the credit side ni mingi, so na plus na huko. So 1,000 plus 700 plus 250 plus 2501. Napata 4451. Are you getting 4451? 4451. Also on this side 4451. Aya. Balance carry down. Itakuwa ngapi? So 4451 minus 2,000 minus 590. So our balance carry down. Mimi napata ni 1861. Sijui kama mnapata the same thing. 1861. I think that one is correct amount. Plus 1,000 plus 600 plus 3751.5. 8351.5. I hope you are getting the same item. 8351.5. Then we go to 8351.5. You can get the balancing figure minus 2,800 minus 150. So we go to 540. 125. Now we don't need to prepare the capital account because we have said the balances itakuwa the same. So the balance at the end will be the same as the balance at the beginning. the balance at the beginning will be the same as the balance at the end. So we don't need to prepare the capital account. The balance is the same. So the balance at the end will be the same as the balance at the beginning, or the balance at the beginning will be the same as the balance at the end, because we have assumed that it is only the current account which we shall fluctuate, and not the capital account. So any other account that we need to prepare? Yes, balance sheet. So the last item is our balance sheet. Tutasema Maria and Bakari. Maria and Bakari. Statement of financial position. Statement of financial position as that 30th April 2016. Now we start with the non-current assets. Non-current assets. So the first one from the question part, we have land, not land, building. So we have the building. I hope it will share. Building, we need to do adjustments. Now the building, what is the cost of that building? It is 8,500. So the cost of that building is 8,500. We less the depreciation charge for the year to 12.5. But also remember to less the accumulated depreciation. So remember to also to less the accumulated depreciation for that item. Do you have the accumulated depreciation for that one? There was no any accumulated depreciation. So, or the provision for depreciation I go for. So remember the word provision for depreciation is another name of accumulated. For building I go for. So commercial is 0. So 8500 minus 212.5. 82, 87.5. So that will be equal to 82, 87.5. 82, 87.5. And to talk about buildings, we can go to the next one, which is furniture. So building to my now. So let's go to furniture. Furniture. Now for furniture, furniture paric on cost, that's 200. That's 200. Remember our item is 1,000, that's 200. Minus the depreciation for the year. Now the depreciation for the year for furniture is 245. 245, but remember not to forget the provincial. The provincial for the furniture, it was 750. So the provincial for furniture, it was 750. So it according 3,200 minus 245 minus 750. 2205. 2205. 2205. Then you can go to current assets. We can start with the inventory. Now, inventory was information number 1. Information number 1 is 15,600. So 15,600. Yeah, after inventory, we can now decide to go to debtors. Debtors. Now, debtors requires a working. So, what's our debtors in our balance? So, if you go to our balance, account receivables is 5660. 5660. Did you have any bad debts in additional information? In additional information, there was no any bad debt, but we had allowance. So we just adjust for the allowance only, because there was no any bad debt in the additional information. So unaangalia kwa additional information. The only information in additional information was information number 4 for allowance for bad debt. So that's what we shall remove. There was no, the bad debt was into a balance, already has been adjusted. So anything into a balance, it means it has been adjusted. 54,16. We had a prepayment of insurance. Ilikuwa nimeweka star. Prepayment for insurance 40. Nimeweka hapo. Prepayment insurance. Ndio hii hapa. Ndio hii, it was 40,000. So we had a prepayment. So do you have any other prepayment? Cash at hand, it was not affected Do you have any other prepayment before niendelee? Cash at hand iko. Cash at hand. Let's go back to our balance. We have cash balance to 30. So cash balance. It was not affected in any manner. That I think those are the items that affect that account. So total assets. Let us find the total assets. Total assets. So we say 8287.5 plus 2205 plus 15600 plus 5460 plus 40 plus 230. So 31822.5. 31822. We use a different pen. 31 inasema ni 31822.5. 31822.5. So now that is all about the assets. Let us see the capital and the liability. Capital and liabilities. We start with the capital account. So Maria and Bakari. So Maria and Bakari. So Maria and Bakari. So tuende pale juu, we said that the capital account will not be affected. Tutaiacha hivyo. 12,000 na 5,000. 12,000 na 5,000. So we say that those two accounts will not be affected. Then we need the current account. So we have Maria and Bakari. So Maria and Bakari, these balances ziko hapa 5401.5, 5401.5, 5401.5 na 1861 na 1861. These hapa juu. You can see the balances there. So those are the capital. Let's see the liabilities now. So I think capital tumemaliza now. The first liabilities that we had. Yes.
Hapo kwa current assets hakuna bank balance.
Bank. Kuna bank huko juu?
Yeah.
Ya ngapi?
1070.
Aya, angalia iko side gani? Is it on the debit side or on the credit side?
Credit side.
So that's a bank overdraft. Walikuwa wamefuriza. Kwa sawa? Tuanze na hiyo. Let's have that one, bank overdraft. Nimesema hapo. Ya ngapi? 30? Is it that 70? Or 1070, sorry. That's a bank overdraft. So iko on the debit side. Yes, kama ingekuwa on the credit side, ingekuwa on the debit side, ingekuwa an asset. But sasa iko on credit side, that is an overdraft. Tuko sawa? And then payables. Rafiki yake tena namfuata hapo payables. Payables ni ngapi hapo? Kwa hiyo tu bank balance hapo payables chini yake. How much? Payables hapo ni ngapi chini yake?
6,200.
6,200. Haya, tulikuwa na something here, accruals ya salaries. Ndio hapa. Lazima tuweke ya 200. Yale na accrual. Niwaambia mweke star. To have a two effects. Accruals. Ilikuwa off. Ilikuwa which item? Salaries. 200. Haya, tumemaliza ni kama. And then na pia we have another accrual of electricity. So we have another accrual of electricity, which is 90. I think in ISO, I think there's no any other account. I think no any other account, so you can say total capital and liability. Add them together unaweka unapata same total capital and liabilities. It's supposed to be 31 8 to 2.5. 31 8 to 2.5. That 182.5. Now, are you getting the same? That 182. So 12,000 plus 5,000 plus 5401.5, 1861, 1070, 6200, 200 plus 90. That 182.5. Now that one marks the end of partnership when it comes to the normal account. There is no any changes. You can get a question, there was no any changes in profit and loss account. So the profit ratio is required the same. There was no any admission, there was no any retirement, no partner died, there was no anything. So it required just a general question. So that's how you do it. So that's how you are supposed to carry out this kind of we shall do the question for last sitting tomorrow. So last sitting was set retirement. So I think tomorrow we shall come and do retirement. But before we do retirement, we need to do admission first. So we need to do admission. I think maybe tomorrow tutakuja kufanya admission of a new partner, tujaribu kama tutafanya admission plus the changes in the ratio. Then tukimaliza, then we try to do the question for last sitting, which it was about the retirement of a partnership. So I think that one is all about it for today. So Rosalind?
Yes.
Yes, what is your question?
I have no question. I'm okay.
Okay, now what about Raphael?
I'm good.
So I think that one is fine. So that's for partnership when there's no any changes. Tomorrow we shall start with the first changes, admission of a partnership, admission of a partnership. So you have a great time. Let us meet tomorrow, same time, same place.
So tomorrow do we have QA?
QA itakuwa, nataka nimalize hii partnership, tutajua tu. We can organize 2 classes tomorrow. But keep reading the videos in the Telegram. So you know the QA classes are complete in the Telegram. So ukienda usome video zote utakuwa umemaliza kila kitu. But that one is fine. We shall fix a class. Don't worry about it. So, but make sure you are reading the other topics, the videos of other topics. Usikuwa unanitegemea. So make sure you are reading the other topics. Otherwise kitakuramba. Anyway, sawa, we meet tomorrow.